Hey there, everybody. Welcome back. Welcome back. We are so happy to have everybody here. Let me know in the chat if you can see and you can hear. This is awesome. We were doing some test driving, if you will. Market Minds very infrequently while we launched the BTC. And what we got was a lot of feedback from people that kind of wanted a combination. And I'm hoping everybody can hear me right now. Hang on. Let me make sure. And let me ask here. Hey, everybody that's in Market Minds, can you hear me in there? Okay, great. Awesome. All right. Not sure why I'm not seeing the chat here, but that is okay. There we go. Oh, man. It's all just me clicking a button. Oh, boy. Okay. Let's present here. Let me really happy for everybody to be back. And while I'm working on getting my screen fixed here, we should be getting filled in GLD, which we're going to go through right now. And can this rally hold? I mean, is this real? Is this going to be pulled back because China doesn't agree, or there's a difference between what we say and they say? I don't know, but what we saw this week, there we go. What we saw this past week and the weekend is what the market was looking for between the start with the US and UK and now with China. There is a problem with all this, though. What is also going up in the market right now, everybody? And hopefully you can see me. Hopefully you can see the big thumbs up on the screen now. Hey there, everybody. All right. What is also going up in the market right now? Anybody? Because this is absolutely not what they want to see. And this is a byproduct of what is happening with this big market rally. Let me pull this live shot here. Everybody see this? Yeah, yields are going up also. Kind of the opposite of what the administration and kind of we all want to happen. Not only are yields going up, but as of Friday, the odds of a June rate cut, not very high at all. But the odds of a July rate cut were about 70 to 75%. Now, with the tariff situation being fluid and now being on, better footing, what has happened, and I'll pull this in here right now. So what has happened, this is now the June meeting, okay? There's now priced into the market a 92% probability of no cut in June. July, which was about a 75 to 80% probability of a cut, is now only 40% probability. So 60% basically of no change, no cut. That has now been pushed out to September as the likely first cut. So this 18% here is no cut, 82% basically of a cut in September. So the market rally like this, obviously we all love it. It's great, but we don't want to see yields higher. At some point, this rally today is going to catch up to, or vice versa, the raise that we are seeing, the increase we're seeing in interest rates is going to catch up to the equity market. They can't keep going up together. They can't. Something's going to break. Something is going to break. So what this rise, this spike up in yields is kind of telling us is that even though, the tariff headlines are good, market likes it, what this is telling us is that inflation is more than likely going to stay persistent. And that is why the Fed is going to be very hesitant to lower rates. So we'll see. We'll see what happens from there. But anyway, that was an aside, and I am just so incredibly happy that we are back. Tomorrow, I will be in the S&P 500 pit down on the floor, so I will be live there tomorrow. May even have a special guest with us. You never know. But today, let's talk about broken wing butterfly spreads. Okay, and in fact, Danny, if you can put in the chat, we have a great video in our archives and in our YouTube online. In fact, I think I can put this in here. Let me see if I can do this. Let me get Prosper Trading YouTube, and if anybody wants to review not just this session today, but the broken wing butterfly long video training that we have created, I am still looking for it, but I will get it. Come on. I know you're here. I know you are here. There it is. Found it. Found it. Here it is. Okay. Great. Great. Yep, that's the one. So that link you see there, guys, will take you right to this video. But let's first talk about, real quickly, what a butterfly spread is. Okay, a regular butterfly just combines a bull and a bear spread. Call spread long, call spread short. Put spread long, put spread short. Okay, and the nuance of a butterfly is the 1 to 2 to 1 ratio, and that the distance between the long and the short strikes are equivalent. Okay, equal amount of long and short strikes, you get your max profit right at the short strike. Everybody knew that, right? Short strike, short strike, short strike. But now what about this guy here? What about this guy that's got the broken wing? Besides feeling badly for him or her, right? The difference, well, first let's talk about the similarities between a broken wing and a regular butterfly. We're still combining a bull and a bear spread. So either a long call spread, short call spread, or long put spread, short put spread. Okay. The difference, though, the difference between this and a butterfly is the distance between the strikes. So in a regular butterfly, which is a 1 to 2 to 1 ratio, and that is also the case with a broken wing, the distance between the long and the short spreads are different. And we do that, or the reason that is put on that way is to get more of a delta bias. Okay. Ultimately, where do you want the stock to go? You still want that max profit right at the short strike. But like I just said, what it does, it allows for a greater delta move, more of a bias. And I'm going to go through this right now. If you guys have any questions about this, let me know. But I'm going to go through an exact example here. And by the way, I've got a different screen up. Was everybody filled in GLD? I'm looking at GLD trading 297 now, basically. And thinking that we were filled. Yes, Pat, thank you. Perfect. So this will be really good then for the P&L that we're going to go through here, which I had originally set this up to go through the Lilly LLY broken wing butterfly, which we put out a signal this morning in, and like 3 people got filled, and literally the stock is up $40, which is just, I mean, ugh. For those of you that did get filled, awesome, but there were literally only 3 people that got filled. So let's talk about how we look at this. How do we calculate how we want to do something like this? Is it good reward to risk? What is the upside? What's the downside? Here is the option chain in GLD for the expiration that we just put on, June 6th. So the first thing we want to start, just like with any spread that we're looking at, is what's the expected move? What is the expected move? So this was a few minutes ago. It's right. It's 297 now, not too far away. Stock was 297 and a half a couple minutes ago. What's our expected move? Based on that, everybody should be able to just kind of glance at that right there and look at that and have a good answer. Danny, thank you for that. Always on the hop. Okay, anybody? What's our expected move here? Thank you, Gene. Anybody agree with Mean Gene? Gene, there are a couple Mean Genes that I knew growing up, not knew personally. One was a wrestling announcer, Mean Gene Okerlund, and the other one was Mean Gene Rayburn, who was a game show host, especially on Match Game. If you guys remember, if you're as old as me and remember that growing up. Okay, we got Dave, Thomas, everybody, Gong Show, yeah. Well, I think that was Chuck Barris that was the host, but Gene Rayburn may have been the director of that, if I'm not mistaken. Okay, so back 12 and a half bucks, right, is our expected move. So do you think it's any coincidence then that in the spread we put on, 310 was our target, 310 was our center, center of the butterfly? Well, let's take a look. Okay. Here was a snapshot of when I took that also at 297 and a half. Okay, with our target at 310. Now, let's go through this. We said that a butterfly, whether it's a regular butterfly or broken wing, is always done in a 1/2/1 ratio. Okay, in the broken wing here, what we have, if we break this down, is a $7.50 wide long call spread and only a $2.50 wide short call spread. Rather than 5 and 5, 10 and 10, 7.5, 7.5, which would be a regular butterfly, this is what gives us the bias, longer short delta. And in this case, it happens to be a long delta bias. Does everybody see that? Now, as an aside here, this spread was trading roughly, $1.70-ish when the stock was 297 and a half. Where did we say that we might get filled on our bid at 165, and where did you guys report those fills? Well, when the stock came down basically to 297. And how did we know that was going to, potentially be the area? Well, if we had a 12 delta spread and we needed this thing to go down by 5-6 cents, somewhere in that range to get to our 165, that means we had to see GLD come down roughly $0.50, because that delta represents the change in the value of this position as the stock moves $1. Stock moves half $1, we would have expected, and rightfully so, a change of about 6 cents, which put us right to our sweet spot at $1.65. Okay, everybody following along so far? And hopefully, if you are new to Market Minds, you are enjoying what you're seeing here. Okay, so before we move on, what I'm going to ask all of you, here is our word of the day. For those of you that don't know what our word of the day is, we at the end of our program today, at the end of us discussing things, we're going to do a spin the wheel, a random spin the wheel for everybody that enters their name. And the word of the day is gold. So if you put the word gold in chat, your name will be entered onto the wheel. And at the end of today, we will spin the wheel to win some swag. However, what I really need everybody to do is go to your page right here, your YouTube page, and I need everybody to smash this like right here. Smash that like. You can share too if you want, but really that helps us immensely. So if everybody could do that, I would be really, really appreciative of that. Okay, everybody smashed before I go on? That's a bad question, right? I shouldn't be asking if you're all smashed. I have no business knowing. It's not Saturday night. It's not 5:30 somewhere. Different meaning here. Different meaning, everybody. Okay, anyway. And shared on X. That is great also. Aladdin, very, very appreciative of that. Okay, let's go back here. So here's what we did. And anybody that had that signal was just filled at $1.65. So what does that P&L look like? And how do we know if that is a good price, a bad price, an appropriate price, fair price? Well, this is what, if you put into whatever platform you're on, Thinkorswim, E-Trade, whatever, Sterling, like what I use, this is what your risk chart is going to look like at expiration. Okay, and I'm going to break this down for everybody. But at expiration, if we're below our first strike of 302.5, which is basically right here, this is all going to be a loss. Okay, and that loss is capped out at what we pay for the spread. So we can never lose more than $1.65. So when you are figuring out, okay, you know, how many of these butterflies should I do? 1, 2, 7, 12? It's always based on your risk. So let's say you allocate, and your allocation, remember guys, has to be consistent. Let's say you allocate $500 per spread. Well, 500 times 165, you're going to do 3 of these. So on and so forth. So that is our max loss, 165. Now, our peak of our profits, as we know, are always at the short strike. So at expiration, at the short strike, that is going to be our peak. And I'm going to go through this with everybody. And why is it our peak? In this case, in the broken wing butterfly, guys, why is the short strike our peak here? Besides knowing that the short strike is always where we want the stock to go, why, in this case, do we want it there? All right. See these answers coming through here. What will be worthless, Steve? Howard, why is it the max profit, though, at the short strike? We know that it's going to be the max profit at the short strike, and I'm going to break that down for everybody here, but why? I want you guys to think about it, like close your eyes and intuitively think about, okay, I've got this position on, I've got this position on. Why right here is that the ideal spot? Robert TB. Steve, there you go. Yes, everybody look in the chat. Because at the short strike here, remember, we have two spreads on. We have a long spread and a short spread. Okay? So at the short strike, our long spread will have maxed out, while our short spread will be worthless. Let's go through this. That's why I did this screen right here. Does everybody see this? Does everybody see this spreadsheet up here? With all the nice little colors. Okay. So just like we looked at on the graph just now, guys, if we are at 302.5 or below at expiration, these values are at expiration, not today, Friday, next week. These are all expiration values. If we are 302.5 or lower, then all of the options are going to be worthless, and our max loss is what we pay. So again, that is critical to understand that. That is critical to know that, because that's what we base the amount of contracts we're going to do. That's also what we base. Robert, there you go. Love that. That is also what we base our reward to risk on. It is what we base our reward to risk on. So how do we calculate actual reward to risk in this instance? Okay, before we even go on and go through this P&L spreadsheet here, how would we calculate our reward to risk? Wow, the market is market's pretty close to on its highs of the day here. The Russell's up 3.5%. The only thing down today, bond prices and Bitcoin are both down today. S&Ps are up 3%, Nasdaq's up 4%, Russell's up 3.5%, and the Dow is up 2.5%. Kent, awesome. Awesome. So V sharp, when you talk about decay, that's not really going to play into our reward to risk. But Kent just said 585 divided by 165. Before I draw anything on the board here, what do you see on your screen that stands out for what Kent just said? What do you see there? Lita, is that because there's not a deal with Ukraine, or why? I didn't even notice that. So, or just because it's a risk on to the market, so risk off for some of this other stuff. So everybody, going back to what Kent said and Steve said in the chat here, what is blaring at you? What is blaring at you with that number that they both said? Look at this fluorescent green area right here. What is so, Gus, I'm not sure what you mean by seeing a max loss, but what is so prominent about this? Well, that's our short strike, right? Which was calculated, or we're targeting that because of the expected move. 310 is our short strike. This fluorescent green or neon green is flashing, 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 because that is where, if you look to the bottom line here, you see the max profit, right? That is where you see the max profit. Does everybody see that? Hey, Emmanuel. Nope, the reward is not your price paid. The price paid in this instant here, that's our max loss. That's our risk. That could go to zero. So if we now take simple calculation, we now know what our maximum reward is, 585. And we get that because what is the most the spread could ever be worth? That's at the short strike of 750. So 750 less our investment, or less our maximum risk, gets us to 585. So the most we could make is 585. The most we could lose is 165. That puts us at a reward to risk of about 3.54 to 1. Okay, just a simple mathematical equation. What does that mean? That means for every dollar that we are investing in this trade, every dollar we have at risk, we could make $3.54. Does that make sense to everybody? Does everybody understand how we got that? Okay, now, before I go through this kind of color by color on here, we're going to give a last call out for our wheel spin today. If you haven't already entered, the word is gold. I'm looking at this chart and I'm really in disbelief that Lily is up $40, up basically 5.5% to 6% from where we put that signal out this morning. Okay, so last call here, guys. All right, let's get back to this here. Okay, we already talked about if the stock is 302.5 or lower at expiration, we're going to lose everything. We lose our $1.65, can't lose more than that. Anything over 302.5, we're going to start making some money back. So 303, our loss is only $1.15. 304, it's 15 cents. And then this nice shade of Carolina blue, Michael Jordan, 304.15 is our break even. Why is that? That's because our call value would be worth $1.65, which is what we paid for the spread. So right there is our break even. Anywhere over 304.15 at expiration, we will make money. Okay, we will make money. Danny, we're not accepting any more for the wheel, right? I think the wheel is officially closed. Okay, now, what we see here is we will keep making money, keep making money, keep making more money the higher the stock goes, up until the short strike. And why is that? Again, I know I've repeated this, guys, but it's so important to inherently understand this. At the short strike, which in this case is 310, that is the spot that our long part of the spread, our long call spread, will max out at $7.50. Okay. While at the same time, the short spread is worth zero. Certainly, if the stock moves higher and higher and higher, our long spread's still going to be worth 7.5, right? That's the max it could ever be. But if we start to move higher, we now are going to be given some back because that short spread has some value to it. So 310, this fluorescent green here, that is That's heaven right there. Now, if we go higher, that's okay. That's okay. We're still going to make money. We just start giving back a little bit. And once we get to 312 and a half or higher, so that every option in the position is now in the money, once we get there, the P&L remains static. And that is why if we go back to the P&L graph right here, we can see once you get to that point right there, and that's at that 3012 and a half, the P&L remains static. That is the sweet spot, Howard. So broken wing butterflies, again, the reason we like to trade those is because of the difference in the distance between the strikes, which allows for a greater delta move. Wow, market is moving higher. Some of these gains today, seeing, okay, Lily is now up almost 4%. Boy, that one is just bothering me. Lululemon's up 8%. Meta is up 8%. Netflix is actually down 2% here. Microsoft is up 2%. Apple's up 6%. Amazon is up 8%. Google, Alphabet is up 3.5%. I mean, this is just, wow. Those are big moves there, folks. Those are really, really, really big moves. Holy cow. I think people really wanted Market Minds back. You know how I know? Because I am looking at this wheel here. Let's go. This is like old style when we had the wheel just completely jam-packed here. Can everybody see the wheel on the screen? Making me dizzy, spinning around here. Big wheel. Love that, Elisa. Little proud Mary there. Love it. All right, so because we are back today, we're going to do two winners today. So here we go with the first spin of the wheel. There we go. Hopefully nobody gets vertigo from this. First winner, Kenta Randall. Who is it? Randall Vanek. Are you here to win it? You must be here to claim your prize. Randall, are you here? Boom. Okay. Danny, if you can post up here what they need to do, Randall, please just email me at prosperswag@prospertrading.com with your address and size swag. Okay, Randall, you won. I'm removing you off so you can't win again right now. Let's get a second spin here. Here we go. Winner number 2 today. Winner number 2 is going to be Aladdin or Karen. It's so close. Karen. Oh. Karen, are you in the house? Thank you, Paul. That's right. Smash that button. Karen, are you in the house? Oh, Karen. Oh, if she snuck out of class early today, we're going to have to spin again. Karen, we're calling you out. We'll give you 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay. Spinning again. Oh, Karen. Oh, my God. You talk about getting in right under the bell. Karen, nicely done. There she is. There she is, Karen. You see that email up there? prosperswag@prospertrading.com. Make sure you shoot me an email there with your mailing address and size swag. Okay, tomorrow I will be back down live on the floor in the S&P 500 pit. What if there's no epiphany in the market tomorrow? And I'm actually going to bring, I think my broker buddy from the VIX is going to join us tomorrow. What would you like the topic for tomorrow to be? Any suggestions here? And please make sure, guys, you smash away before you leave here. Any suggestions for tomorrow? Yeah, John, we got her. Karen, we got Karen. We know she's here. We got her. Just looking for some suggestions for tomorrow. Collars and protective puts. Boom. David, that's it. Love it. Love it. Hang on. Hang on. Collars and protective puts. We're not talking about collars like this kind of collar. Love it. That will be good. Boom. Love that. All right. Listen, everyone. This was fantastic. We had, 160 people here for our debut back. I really appreciate it. Please smash, share, let everybody know we are back and better than ever. We will see everybody tomorrow at noon. I will be live on the floor, and we will be talking about protective puts and collars. Lita, we'll figure one out there. Yes, always that live training, that's relevant to what we have. So we will we will definitely add that in there. Please like, smash, and subscribe. Aladdin, love it. You must be in the e-marketing business. Thank you. All right, everybody. Appreciate all of you. We will see you tomorrow. Thanks, everyone.